Larry Fink is often described as the most powerful man in finance, a title that reflects his immense influence in the global economy. In this video, we'll discuss his remarkable journey, from early career challenges to leading BlackRock, the world's largest asset manager. Join us as we cover the story behind his success and the impact he has on the financial landscape. In 1987, before the infamous Black Monday stock market crash, Larry Fink, a promising young talent on Wall Street, suffered a devastating blow when he incurred a staggering $100 million trading loss. Fink, who was deeply affected by this setback, recalls feeling so angry at myself, mortified, and humiliated. The magnitude of this loss led to his departure from the company he was working for at the time. However, this seemingly disastrous event would ultimately prove to be a turning point in Fink's career, as it set him on a path to create one of the most successful investment management firms in the world, BlackRock. The lessons learned from this experience, coupled with Fink's resilience and determination, paved the way for his future success and the establishment of BlackRock, which has since grown to become a global leader in asset management, with trillions of dollars under its management. BlackRock has grown to become one of the largest asset managers globally, overseeing more than $7 trillion in assets directly and managing an additional $20 trillion through its innovative software solutions. This remarkable growth reflects the company's ability to adapt to changing market conditions and meet the diverse needs of its clients, ranging from individual investors to large institutions. BlackRock's influence in the financial world is significant, as it not only manages vast sums of money, but also shapes investment strategies and trends across the globe. Larry Fink's journey to the top of this financial powerhouse began in California during the dynamic 1960s. Initially, he studied political science at UCLA with dreams of becoming a politician. However, his career took an unexpected turn when he joined First Boston as a bond trader in the early 1970s. This experience in investment banking opened his eyes to the world of finance, leading him to co-found BlackRock in 1988. Under his leadership, the company has transformed the investment landscape, emphasizing the importance of risk management and technology in asset management. In 1976, Larry joined First Boston and quickly made a name for himself, becoming the youngest manager in his department. He had a knack for seeing things differently and recognized the power of computers in trading. Larry's innovative approach revolutionized the way mortgages were handled, setting him apart from his peers. As the American economy began to recover in the early 1980s, Larry continued to push boundaries. He was at the forefront of developing new financial products, such as mortgage-backed securities, which allowed him and his company to become major players in the industry. Larry's ability to think outside the box and adapt to changing market conditions helped him achieve remarkable success in a relatively short period of time. Larry faced a significant setback in his career in 1986 when his company experienced a $100 million loss in a single quarter. This was a year before the infamous Black Monday stock market crash, which further exacerbated the situation. The substantial loss had a profound impact on Larry's standing within the industry, as he was not fired but rather sidelined, effectively becoming an outcast among his peers. However, Larry's resilience and determination allowed him to bounce back from this challenge, and he went on to lead Oracle to even greater success in the years that followed, cementing his place as one of the most influential figures in the technology sector. Determined to regain his status and prove himself once again, Larry made the bold decision to start his own business. He knew that this would not be easy, especially with his tarnished reputation hanging over him like a dark cloud. Raising funds was a significant challenge, as many investors were hesitant to back someone with a questionable past. However, Larry was not one to give up easily. He spent countless hours refining his business plan, networking, and seeking out potential investors who might see the value in his vision. Just when he was beginning to lose hope, fate intervened in the form of Steve Schwarzman, the esteemed founder of Blackstone, one of the largest investment firms in the world. Meeting Steve was a turning point for Larry, Steve's reputation and experience in the business world opened doors that had previously been closed to Larry. During their conversation, Larry shared his ideas and passion for his new venture, and Steve was impressed by Larry's determination and innovative thinking. Recognizing the potential in Larry's plans, Steve decided to invest in his business, providing not just the financial backing Larry desperately needed, but also invaluable mentorship and guidance. With Steve's support, Larry felt a renewed sense of hope and purpose, ready to face the challenges ahead and work tirelessly to rebuild his reputation and achieve success in his new endeavor. In 1988, Larry and Steve took a bold step by starting Blackstone Financial Management with an initial investment of $5 million. Their journey began in a competitive financial landscape, but their hard work and smart strategies quickly paid off. Within just 5 years, Larry's fund grew remarkably, managing an impressive $8 billion. This rapid growth was not just a stroke of luck. It was the result of Larry's keen understanding of the market and his ability to make informed decisions. He learned the importance of being risk-conscious, which means he focused on minimizing potential losses while maximizing gains. To achieve this, Larry relied heavily on statistics and algorithms to guide his investment choices. By using data and mathematical models, he could analyze trends and predict market movements more accurately. This analytical approach allowed him to make smarter investments and avoid risky ventures that could lead to significant losses. Larry's success story is a testament to how a combination of careful planning, data-driven decision-making, and a strong understanding of risk can lead to remarkable achievements in the financial world. In 1994, Larry Fink, a co-founder of BlackRock, had a disagreement with his business partner, Stephen Schwarzman. This led Larry to seek independence for the company. PNC Bank, a financial institution, stepped in and bought Blackstone's stake in BlackRock, giving Larry the opportunity to focus on growing the company without outside interference. Over the next few years, Larry's vision and leadership propelled BlackRock's growth, and by the late 1990s, the company was managing an impressive $46 billion in assets. This early success laid the foundation for BlackRock to become the world's largest asset management firm, with trillions of dollars under management today. During the 2008 financial crisis, BlackRock emerged as a key player in stabilizing the financial system. As one of the world's largest asset management firms, it had the resources and expertise needed to navigate the turbulent economic waters. Larry Fink, the CEO of BlackRock, was particularly important due to his deep knowledge of mortgage-backed securities. These complex financial products were at the heart of the crisis, and Fink's understanding allowed BlackRock to step in and help rescue troubled banks and other financial institutions. By offering guidance and managing distressed assets, BlackRock played a vital role in restoring confidence in the markets during a time of widespread panic. In the aftermath of the crisis, BlackRock's influence only continued to grow. The firm became a trusted advisor to governments and central banks around the world, helping them devise strategies to prevent future financial disasters. As economies began to recover, BlackRock expanded its services and strengthened its position in the investment management industry. The lessons learned during the crisis and the firm's proactive approach to risk management solidified its reputation as a leader in financial services. Today, BlackRock is not just a major player in asset management. It is also seen as a key voice in discussions about economic policy and financial regulation, demonstrating how a crisis can reshape the landscape of finance and elevate the importance of expertise and trust. In response to the rapid growth of the internet and social media, Larry Fink, the CEO of BlackRock, made a strategic decision to shift the company's focus toward exchange-traded funds, commonly known as ETFs. This change was significant because it made investing more accessible to everyday people, allowing them to buy and sell shares in a wide range of assets just like they would trade stocks. By embracing this new investment vehicle, BlackRock was able to reach a much broader audience, including individual investors who previously might have felt overwhelmed by the complexities of traditional investing. By 2014, this shift had paid off remarkably well for BlackRock, as the company came to control nearly half of all ETFs in the United States. This dominance not only solidified BlackRock's position as a leader in the investment management industry, but also reflected a larger trend in finance where more people were taking control of their investments. With the rise of technology and online trading platforms, individuals could easily invest in ETFs, which offered diversification and lower costs compared to traditional mutual funds. This democratization of investing not only benefited BlackRock, but also empowered countless investors to participate in the financial markets. Thank you for watching. If you enjoyed this video, please like, share, and subscribe for more insights into the world's most influential figures in finance.